Okay, recording this video Sunday 22nd of September 2013. It's just coming up to 10:47 a.m. Chicago time. On a little bit of a roll with doing videos, so I thought I'd record one on the euro. A couple of reasons for doing that. First of all, I got this email from Jay a few days ago, which I want to respond to. Secondly, we've got the German elections happening today, Sunday, in Europe, and everybody's kind of waiting with bated breath to see whether Angela Merkel will make it back in as the head of the country. And I suppose, doing a video on the euro on the weekend before the announcement of the results is kind of sticking your neck out a little bit, but it's worth revisiting the analysis, and I'll just show you what my better charts are kind of showing at the moment. So just before I'm going to go to those this email and those charts, just want to make a very, very quick comment. The Eurozone Impressions article that I put out on Saturday generally went down extremely well, got very positive emails and people saying it's nice to hear what's going on in the rest of the country. But, of course, obviously ruffled some feathers and got a rather emotional email from Spain saying that effectively, it was a little bit of a unfair, kind of call on what was happening in his country. So sorry about that. I'm sorry. All I'm doing is relaying what we see and do and things that are said to us. It's just like, I feel it's a little bit of don't shoot the messenger kind of thing. It's like to say that things in Spain are hunky-dory is anyway. Let's move on. So first of all, Jay, this is the email. Hello, I watched your videos last week where you called for the euro to continue much higher based on the confluence of your indicators. As we've seen, the euro has reversed and near breaking the 131 level. I know no analysis is right more than 50 to 60% of the time, but if you could revisit this trade and where your better indie system may have missed the reversal, or where we as traders could have spotted it, I think it would help us to make better observations when looking at some of the signals and weeding out false signals in the system. Thank you for your work, Jay. So let me just show you, this is what Jay is talking about on the daily chart of the euro. So euro at EC, this is the continuous contract on TradeStation, daily chart here. And I got the video, the email from Jay when the euro was starting to hit the 131 level here. And the video before that I put out saying this is a jumping the creek type bar, blue professional bar through resistance, and I thought that we were going to go through 134 and keep going. When it was starting to break and close above 134 like this, I thought that we would just kind of keep on going. We didn't kind of keep going straight up. We came back down to 131. We broke the low of that blue professional bar, which was for me fairly significant, but subsequent we had rallied to 135.2. So it wasn't a reversal at that point. It was actually just a dig down, a deep dig down, and kind of got on going. So let's come back to that chart in a second. First of all, I just want to talk about currencies in general. And of course, we're post-global financial crisis, and we're through, I keep on saying, we're through the looking glass. Everything has changed. All the old rules no longer apply. It's like we've got a whole different new set of rules that we've got to kind of be cognizant of. And the old rules used to say, the strength of a currency was effectively a vote of confidence in that country. So as the currency went up and down, people saw that country as a good place to invest, a good place to do business, a good place to live, and so on. And if that country was doing well, their currency was strong, those people would travel overseas, they would spend their currency, life would be good, their exports would be more expensive, but when they traveled overseas they would find goods kind of relatively inexpensive. That was the good old days. Of course now, through the looking glass, the only thing that counts is central banks and what the hell the central banks are doing. This is to do with relative QE happening in different countries and central banks around the world, and direct intervention by the central banks. Now, one of the things that is happening at the moment is the euro is strengthening, and one of the reasons for that, well, there's a couple of reasons for that, but in the back picture you have to think about what is happening with the central banks. We know the Fed is being extremely aggressive with quantitative easing, and so that's why the US dollar is going down in value. Relatively, we know that the Japanese, the Europeans, the Swiss, the English and so on, their central banks are also partaking in quantitative easing and printing money and buying assets and so on. But it's the relative size of that quantitative easing compared to the size of their GDP that matters. And because the European Central Bank is to some extent limited by the amount of quantitative easing it can do. It is prohibited by law when it was set up to do direct quantitative easing, but what they have done is they have lent money to all the banks, the large commercial banks around Europe, in order to buy government bonds. Those banks buy the government bonds effectively on behalf of the central bank. So they're doing quantitative easing in Europe, but it's stealth quantitative easing, and it's a lot less in terms of relative size compared to what the Japanese, the Swiss and the US are doing. So although there's quantitative easing going on and more money about in Europe, it is less than elsewhere, and so relatively the currency will go up in value because it's scarcer than those other currencies. So that's the first thing to say. The second one is that we now know that the Swiss and the Japanese central banks have been buying directly euro assets. They're buying the debt of European governments, they're buying quality corporate bonds, and they're even buying equities in Europe. So the Swiss are doing it to keep their currency down. They want the euro to be strong, because otherwise all the money is just going to run out of the euros into Switzerland, into Swiss banks, and that'll kill their export economy. The Japanese are doing it because they're trying to make their yen incredibly weak so that they can export more and stimulate their domestic economy, their export economy. So we're through the looking glass. It's about quantitative easing and direct intervention by the central banks. And so, sitting here in Europe and having posted talking about Spain, saying that Spain is, in a world of hurt, you'd have thought, well, why is anybody investing in Europe? Well, this is why. This is what's happening. It's central bank intervention. The other factor that may kind of play in is that if we start to see trouble with the commercial banks in Europe, they will start to repatriate funds to shore up their balance sheets. But I don't know, I don't think that's happening kind of on a large scale yet, but this we definitely know is. So what's the impact of this? And let's kind of review these charts again. So looking at the daily chart, what we've had is we've had a pullback to dirty end of trend signal here. The pullback level was violated, so it doesn't print a nice kind of neat end of trend signal here. But we've had all of our exhaustion selling signals here and here. We've had bullish divergence right on the zero line, and I say wait for flush patterns. If you see that, we get the flush patterns too. This time we get exhaustion selling and bullish divergence comes in right at a support level here at the 127.5 level, and this level started to hold. These blue professional down bars at this point here start to hold. We come back up, we break above the high. This one kind of comes in again, the low of that blue professional bar holds, we start rallying away. The amateurs get a little bit too excited here. You can see they're kind of buying the breakout, and so we get Rambo patterns here. We get a little bit of weakness, and then we get what I thought was jumping the creek at this point here. Fraction too early. I know the low of that bar, blue professional bar, did get broken, but look, the professionals came back in, the lows of those blue professional bars held, we rallied back, and these amateurs who were going long at this point, had to reverse their position, get stopped out or whatever, and were starting to go short at this point here. Unfortunately, I think that's what was being referred to by Jay in his email, is like this is a reversal point at this point. Now, you can also see the strength of the selling that happened kind of into that decline down here. So we had a lot of kind of activity, professionals picking up the lows, amateurs unfortunately I think getting wrong-footed down here, and that's flushed out people. That large amount of selling at that point, we've rallied from there because all of these people have kind of got short into that decline here. So now the move can break to new highs because effectively all the sellers have sold. So remember that. So uptrends start when all the sellers have sold. Downtrends start when all the buyers have bought. This point here, all the sellers have sold. Now they're starting to worry, think about what should I do with my positions and so on. On the daily chart, we've come into a cyclical resistance at this point here. So I'm going to be looking for this to get broken to the upside. I think the German news will be the trigger that kind of does that. And so that'll take us into a proper trend move, a clear kind of trend break above resistance into a trend move. And I think it's going to go for a little bit. If you look at it on the weekly chart here, again quite helpful, you can see here back in 2010 we had the collapse of the euro down to $1.15. We then had a pullback to end of trend sequence here, and this was a nice one. Pullback to end of trend. We have the exhaustion pattern happened on the end of trend sequence here. When that happens, I like to see them on the left shoulders, the exhaustion patterns. This happened on the end of trend. When I say that happens on the end of trend, wait for the second cyclical turn after end of trend. So as end of trend, first cyclical turn, second cyclical turn, bang, there we go, 127. The cyclical support area holds. It becomes a flush pattern here, flushing out the last of the buyers. We've had blue professional buyers. Yes, they were active at the highs here, but they were also active at the lows here. They came into the lows here. They were active. They were selling down the euro, at 145 back here in 2011, bang. On this retrace here, they got kind of short there. Lows of those blue professional bars kind of get taken out and we move into a trend move. Trend move is now over. We've had our exhaustion. We've had our bullish divergence. Second cyclical turn after end of trend and flush pattern. I know this is hopefully, I repeat this again and again and again, but you see these patterns happening at all time frames, all markets and so on. And then this last little move down into 130 on the weekly chart. Amida down bars at this point. Amida up bars here, so we're kind of losing a little bit of juice up here. We come back, Amida down bars here, but now we're through resistance on the weekly chart here. There we go. So we're at 135. Now, so on both the daily and the weekly chart, we're at resistance. I think we're going to poke through there. We'll probably find out on Monday. We're through resistance on the weekly chart. Where does this go next? Well, if you look at the monthly chart, there is a cyclical monthly turn kind of due at some point, but usually that will coincide with an end of trend signal on a lower time frame. So I think this is going to break into an end of trend move where it'll go pull back to end of trend on the daily chart, and breaking above Thursday's high there is going to be kind of the critical level. So that's important on the daily and the weekly charts. Then let's just kind of have some confirmation on the commitment of traders numbers, and I'm going to show you the weekly and the monthly charts commitment of traders. So again, this is looking at divergence patterns, where we get, I take the commitment of traders numbers and I flip them upside down because it makes more sense to me. So declines like this are led by the commitment of traders kind of going down, rises and so on, so you can see. But what is important for me is to look at the divergence patterns when they start to line up like this. So we have some nice divergence patterns here, goes into rally, bearish divergence here, goes into a decline, bullish, bearish, you get the picture. The last ones that we've had on the weekly charts have been bullish divergence down here in the above 125s, where the commitment of traders have been making shallower and shallower moves down. We're now positive, we're above the zero line here. This thing has got professional support is what I believe on the commitment of traders, that this will kind of go higher. Then you can see the same thing on the monthly chart, exactly the same algorithm looking at divergence patterns, highs and lows, lows and highs, marked by bearish and bullish divergence. And on this monthly chart, you can see again the last signal that we've had here has been a bullish divergence on the Euro monthly commitment of traders. The last chart I'm going to show you is this kind of little sequence, and I showed you this when I was going through the Aussie dollar charts. And I break this down into a whole bunch of different time frames from the highest to the lowest, using a factor of something like 3 or 4 between the different time frames. So we look at monthly, weekly, daily, and then an intraday chart, a 460-minute chart. Roughly 3 of these bars, 460-minute bars in a daily chart. And all I'm putting on here is support and resistance lines using beta sine wave. And then if we're above support or above resistance, it plots red, that shows uptrends. If it's below resistance or below support, breaking into downtrends, it's shown in white. So I can see on, and what happens, I talk about these trend moves percolating through the different time frames. The trend move will develop in the lowest time frame first. We'll get our break here and the trend move. Then it'll start to break a resistance on the next time frame up into a trend move there. If it's got real strength, it'll then break into the weekly time frame, and then let's see where it kind of hits resistance on monthly time frames. And you can see over the last few days, Euro has broken into an uptrend above resistance on the 460-minute chart. We've come into resistance on the daily chart, and I'm expecting that to get broken to the upside. We've broken above the weekly chart here, and we've still got cyclical support on the monthly chart here. So where this could run into resistance is when we get end of trend on the daily chart, syncing up with cyclical resistance on the monthly chart. But who knows where that's going to happen. And don't be surprised if this thing, if it breaks, it could be strong. The last kind of high up here was 37.5 effectively, and then we're talking about back up to the 150s. So I think this could be the thing that kind of surprises people and say, why the hell is the euro going up? It's like, that doesn't make sense. Who's investing in the euro? Well, I'm sorry to say, it's these guys. little pesky central bankers who are not doing quantitative easing in the quantities that the ECB, that other central banks are doing. The ECB are kind of falling behind in relative quantitative easing. And then we've got the Swiss and the Japanese directly intervening in the euro and all the European markets, kind of driving that euro up. So we'll see. Let's see if Merkel gets in. I think the euro would rally if she kind of gets in. I think there's a mood in Germany that they kind of like stability. I don't think mostly the average German thinks that she's done a good job in very difficult circumstances. And I think if she gets in, if she widens the margin as well, which everybody's saying it's line ball, it's 50-50, because they've got a political system where they have a lot of coalitions just because of the way their parliament is made up, and people are saying it's really line ball between the two kind of major coalitions. Well, the surprise could be that she actually widens her margin and gets a really clear advantage in Parliament in Germany, in the Bundestag. There we go. I hope you're enjoying your weekend, and let's have a look and see what the euro does over the next few days.